Hey, welcome to the Closing Beat, everybody. Happy Tuesday. How you doing out there? Hope you're having a good day. Welcome to our show. We are financial advisors here at Jazz Wealth. We do things a little bit differently. We are not your typical advisors that like to, wear the suit and tie, do all that sort of fancy stuff. We just like to give you the knowledge, the education. We build our own funds here at Jazz Wealth. Hope you'll check that out at jazzwealth.com and maybe give us a shot. If you have an old advisor or something that's just not doing the trick for you, you know where to find us, jazzwealth.com. You see the markets today? More new record highs. It's the first day of September. The stock market's going to start at those new record highs here today. And before we get started, I just want to let you know, no show on Friday, by the way. I'm going to take the day off from doing the Closing Beat show, so I wish you a good long weekend ahead of time. Also, if you want to reach out to us, just learn a little bit more about Jazz. We don't really have a sales pitch or anything. We'll just kind of answer your questions about us and things that maybe you're trying to do to move over to us. If you're interested in it, you can go to our website and reach out to us right there. We'll see what we can do. If you want to schedule a call or something, you can go right on our website, check that out. Anyways, let's take a look at the stock markets today. You had a slight gain on the Dow, almost 1% there. You had S&P up 0.75%, 1.3 on the NASDAQ. That is, again, just plowing ahead there. The NASDAQ looking really strong there. Let's go over the charts, take a look and see what we got going on, and I'll start with the NASDAQ. We go to the NASDAQ there, getting a little extended. Today was the larger of the range days overall. The volume was nice and strong there. Guess who led the way today? It was the same old. Apple was obviously a big gainer today. We own it here, so I'm excited. That's fine. I mean, I like that it's moving higher, maybe a little extended as we've covered in our research section, but up 4% on the day. And then you got to look at Amazon. Amazon was also in the mix there. Those were your two biggest contributors to the gains. Not the biggest gainers, but the biggest contributors overall. But guess who comes in third place? Zoom. So Zoom comes in third place as the biggest contributor to the gains in the NASDAQ here today. The NASDAQ is now officially up just over 40%. We're going on 41% overall. You might remember last week on the show, I covered this slide here on Wednesday, actually, if you want to go back and see the actual definition. We covered every single time that the NASDAQ's returns were greater, any return over the last 20 years, but we actually look back to see when do we gain 40%? When is this normal? And when it did it happen in the first part of the year? Was it a late year rally? What happened to make it happen? And we kind of plotted out the changes there. 2003, NASDAQ was up 33.33% as of last Wednesday. And in 2009, it was up 35% as of last Wednesday as well. And so that's actually pretty good. You can adjust this number down here now down to 41%, and you can see that's not normal, right, for the NASDAQ to gain that much. So definitely something to be enjoyed if that's something that you are enjoying. Hopefully you're getting a piece of that there and enjoying it there. There you go. So kind of interesting there for the NASDAQ. I'll jump over to the S&P because we're going to go over here to the charts. We're going to go S&P is where I want to be. There you go. Up to new highs today in the rest of S&P. Guess who was the leader there as well? Biggest contributors, Apple, right? Amazon, second biggest contributor overall. S&P is now up over 10% year to date. So obviously strong, nothing to argue about there if you're playing along. Meanwhile, although those stocks get all the attention, I do want to bring your attention to a couple things here. Limited Brands, great day, up 7.25 on the day, almost up as much as Apple is year to date, though it gets not a lot of attention. It's had an amazing rally there. So while everybody's playing with Apple, you got to realize that there's other gains out there to be had. Netflix is actually the same. Netflix didn't get a lot of attention today, but Netflix had a great day. We happen to own this one. I'm super excited about this one to continue its uptrend. Up 5% on the day. All is good there. In fact, Carrier, NVIDIA, AMD, West Pharmaceutical, Dexcom, PayPal, Abiomed, and Amazon are all up more than Apple year to date. So just keep that in mind. If you're trying to diversify a little bit, there's other goodness out there. In fact, there are 390 stocks that are up more than Apple year to date. So there's a lot going on out there, stuff that you could take a look at if that's something that you're interested in. Before we move on, let's talk about our FinTips videos. Bottom right-hand corner of your screen there, you can actually see we've got a couple videos out this week. Dow changes. Of course, you know about the Dow changes already. Apple statistics going on Monday's video. Tomorrow's video is going to be historical performance through September. We'll talk about kind of that, the good, the bad, the ugly. We'll actually show every single day, show a composite chart and everything. Kind of an interesting, geeky one that we're doing a little bit differently there. And in our research site, we've got forward returns following a gain of 7% or more in the S&P to kind of show what to expect going forward, all the times that's happened in the past. And after the show here, we've got got a post coming out, best and worst ETFs and stocks for the month of September. Historically, which ones are the best, which ones are the worst? We'll go over all that. But for now, we'll go over to the sector breakdown and take a look and see what's going on. You see a little bit of a mixed bag there overall. It's kind of split most of the day today. You had 4 sectors lower, the rest were higher on the day. I'll start with materials. They were the strongest on the day, broke to new highs there, great reversal there. Support came from most of the stocks that were already strong early in the day. So Lind, obviously very strong. That one, you can't argue there. Air Products, also very strong, moving to new highs. That breakout we talked about there. Freeport, also moving to new highs. These were the ones that led the way early in the day. But then throughout the day, the rest of them all jumped in besides Newmont. Newmont was the only stock in that category to finish lower on the day, well, with gold being down just a touch. Little weakness there. You got tech stocks moving to new highs as well. That's going to be Apple and Nvidia are your main contributors there. If you're looking in that space, very strong moves overall. Broadcom, do want to point it out. We own it here, so kind of point out to our customers. That's moving along nicely, looking really, really strong. Very happy with that one. The tech sector is now up about 40%, just over 40% year to date, so looking good there. Moving on to healthcare, a little bit of a choppy mess here. It's not a good day for healthcare. Back into the range. You never like to see that. If the stock or sector or anything you're playing is hinting at a breakout and it just can't get it done, what's it going to take, right? It's so messy and so sloppy in here. Just not real good overall. You got AbbVie, which, to be fair, we own this one as well, so I'm not just going to point out winners all day. AbbVie struggling today, continues to pull back. Looks like it's headed back to the 200-day moving average, so that was weak in the space. But you also had Johnson & Johnson, just little pullbacks here, broad pullbacks across the sector. Pfizer in there in the mix as well after getting booted from the old Dow. Back to the 200-day moving average. Healthcare is now back to being flat, just a little bit positive, but basically flat over the last month. So it's a whole lot of nothing going on in here in the healthcare space. Consumer staples there looking good. Walmart was the reason that held up this entire sector all day long. Every other stock basically struggled today. If it weren't for Walmart, you likely would have seen the consumer staples lower on the day. Obviously, Walmart blasting off. I'm excited to see that as well. It's a position we've had for a long time. 6% up on the day there. Like I said, almost every other stock was lower. I thought it was interesting that Costco still moved higher as well with the Walmart news of the Walmart Plus program, because it's kind of like they're, if you think about it, it's kind of like Walmart's got a new subscription service. Costco, you pay to join the club and you get the discounts. Walmart now, you're paying to join the club and you can scan the stuff to get it. I like that. I think I'd be into that. You supposedly be able to take the app, go into the store, scan something, and just walk out, right? That's a little risky, but that's where they're at there. If you're willing to join the Walmart Plus in addition to other things that they're helping you with there. Moving back, let's go over, not a sector here, but let's move on over to retail. Retail, great reversal here today off the 20-period moving average. Real strong. Just a lot of stocks looking the same in this category. I want to point out home builders also doing the same thing. Very strong reversal today. Very strong volume today. Looking really, really good there. You had some of the home builders like Toll Brothers up off its 200-day moving average. You got MI Homes. We happen to own this one. Excited about that to reverse course and reverse all of yesterday's losses all in one day. One other one that we own, we don't get to talk about a whole lot in the mix there. Oh, I typed it wrong. There you go. LGI Homes, very strong, not as strong as some of the others, but it's one that we own and continues to do really well there. Home builders up 60% year to date, so very, very strong. And that is your sector breakdown for the day, at least some of the things that came in interesting overall. Let's go over to the new highs and new lows for the day. Yeah, we're going to do it. You had 37 new highs on the day. 31 of them gained 1% or more. It gives you an idea of kind of the breadth of the rally today and how strong that is. 1% or more gains in basically every stock out there. Not one stock on the new high list lost over 1%, meaning went up to highs and held up there. Very strong, so a good list to look at if you're looking around there. West Pharma happened to hit new 52-week highs. A little bit calm, a little bit quiet there overall, but that's one that's beating Apple in terms of performance. Can anybody tell me what they do? Not a popular one. S&P Global, this is the exchange, or one of the exchanges out there. Good. It's just a beast, right? Nice and strong. Everything looking good there. I have no real complaints about that one. Speaking of beast, you got Old Dominion, real tight, consistent transportation stock moving to highs there, looking good. The home builders doing well today is going to help things like Sherwin-Williams. That's in the XHB, by the way. XHB is not just home builders. It's the supporters as well. Mohawk Carpets, Home Depot, Lowe's, things like that. Sherwin-Williams, of course. So up 2.25% on day. That's a notable new high. And Fastenal, I thought looked interesting as well. Just a real shallow, sort of sloppy breakout, but you've got consistency there. You got people interested. You got broad-based buying today, and it closed near the highs of the day. You like to see things like that. We actually had one new low, so we even tricked the producer there. We got one new low today. Walgreens, it's been some time, all summer, since we were able to point out a new low. The last time we pointed out a new low, you know what the symbol was? Molson Coors. Early July. That was the last time we had a new 52-week low in the S&P. Well, anyways, you got Walgreens here hitting new lows as well. Pretty bad day, down 3 1/3% on the day there. I thought it was, what was it pretty much? What happened there? You got downgrade overall there. They got a new arthritis pain relief gel. So, yeah, there you go. Anyways, that's your new low for the day. We'll move on and let's talk about our watch list for the day. So let's go on over to that. Here's an interesting one for you here today, and this is going to follow up with what's going on our research site. If you want to go to our research site, you just go to jazzwealth.com/research. We're going to publish this as soon as this is over here, the best and worst performing September stocks, and we included some ETFs as well, and some leveraged ETFs, an interesting sort of write-up on that. So we'll talk about that in the research site, but I wanted to give you guys some of these here today, and we'll start on our list there. Financial stock, Assurant, is loaded up. There we go. So this is one of the better performing stocks in the month of September. It is up 81% of the time, average gain 2.71%, median 2.6. The last down year for this one, you got to go back to 2014 to find one. It lost 3.6%, and it's only been down 3 Septembers, looking all the way back 20 years, right? So kind of interesting there. I don't know why, but this one seems to like the month of September. We know that September can be a weak month. At the middle portion of the month, it starts to bleed off there. We're going to see what happens if you saw our video yesterday. But anyways, that's that one. You got IAC. This is in the communication services space there overall. Last year was a rough one for them. They lost 14%, but 79% of the time, this stock is higher in the month of September. Looking strong there. Average 2.3% gain overall. Moving on to Pizza Hut. I'm sorry, not Pizza Hut. I always say that because the symbol's PZZA. Papa John's. Almost new 52-week highs today, 3 1/3%. It's consumer discretionary, naturally. 75% of the time, it is positive in the month of September, looking back through the last 20 years, with a gain of average gain, 3.35%. Now, it was down 5 of the last 20 years. Its biggest loss, 3%. So when it's down in the month of September, it's not a deal breaker, but it can be down 3-4% in that mix there. And it's had a rough patch over the last few Septembers. They've also had a rough couple years, if you ask me there. Moving on to a name we all know, Nike, hitting new 52-week highs today. 75% of the time it's positive through the month of September, but averages a 5.3% gain. That's an impressive gain for just September's overall. 4.64% median gain there. So it's not bad. We're looking good. Lockheed Martin, right now the stock is asleep, but it's been positive the last 3 Septembers in a row. The average is 75% of the time it is positive in Septembers, with an average gain of just about 3%, if that's something that interests you, or if you own it. I'm not telling you to buy them. I'm just saying if you own the stock, you're like, all right, I got seasonal headwinds, if you want to sound fancy, on my side there. Maxim, here we go. I got a tech stock here. 25% of the time it is positive. That doesn't sound very good, right? Moving to the bottom of the list now, stocks that are typically weak, it tends to lose an average of 3.5% in the month of September. Yeah, we spent a lot of time on this. It's only positive 25% of the time over the last 20 years there. And lastly, we'll talk about International Paper, and there it is. Although it's trying to wake up here lately in the material space, it is only up 30% of the time in the month of September. Not very good. It was down 6 of the last 10 years, average loss 3%, almost right perfectly on the dot. I'm not saying any of these are going to perform the same way or anything like that, but you got to recognize there's something, right? We don't know. Maybe these guys, this is their off season. I don't know. They're selling a lot of toilet paper. But let's say it's their off season. You know that this is like a way to start digging a little further if you happen to own the stock or want to know what's going on. So there you go. If you want to know the whole list or check it out there and see everything we wrote up on it and the ETFs as well, go to our website, jazzwealth.com/research. It is $13 a month. We really appreciate the help and support. Helps us grow, add more cool stuff, keep that thing at the bottom from breaking. We're trying anyways, so hope you'll check that out. All right, let's move on over to stocks in the news because there's a couple of them here. If you have questions, feel free to post them. I'll take a chance to try to answer your questions once I'm done. You got Zoom. You can't argue with Zoom. They killed it. Earnings was just amazing there. Zoom earnings came in like 2/3 better than expected. They were expecting 45 cents. They came in at 92 cents. They also raised guidance. Raising guidance is important. That is one of the reasons that you see these stocks taking off over this last earnings season. Up 40% in a day there. That is officially their best day ever. It is officially now the best performing stock in the NASDAQ 100. It is also now officially the most extended stock in the NASDAQ 100, beating Tesla for performance now, beating Tesla for being extended as well. Speaking of Tesla, you got Tesla in the news today. Stock was down about 4%. These guys are smart. Right? You can't argue with Tesla here. They are raising money when they can, not when they have to. If you treat your personal finances that way, you never run into a rough spot. Borrow money, raise money when you can, not when you have to. That's how corporations do it, and here's yet another example of how they do it. I know people have disagreements with that, and that's fine. I'm just saying, they borrow money when they can. They get to borrow money for nothing. They're selling $5 billion worth of shares to you because everybody's interested in buying this stock right now. It's genius, right? It makes perfect sense. They got just a little over $11 billion in debt. So they're trying to sell this, and by the way, $5 billion is a drop in the bucket for them. They're selling $5 billion, they're going to raise that money. They could technically pay off half their debt. If you ask me, I'm surprised they didn't just go for $10 billion, right? The stock could have handled it. They probably could have got it done around $450 or so, but they're going to sell off a ton of shares to raise $5 billion there for Tesla over time. They're not going to do it all in one day, of course, so that's that one. All right, going back over to some of the other stocks in the news there. There you go. You got Apple. Bloomberg says they're going to ship 75 to 80 million 5G phones this year, and they're already working to update their watches and other accessories for the new 5G coming out. So the stock was higher by 4%. Means they're positive about demand. That's really all it is. That's why the stock was higher today. 75 million is above what they were expecting. It means that they believe they can sell that many. They believe that the demand is there, and that's awesome. So good for them. The stock was higher on the day. No argues. Walmart, we already talked about that one. Up sharply on the day. Walmart Plus coming out. They're competing with Amazon. In a way, it's not really like an Amazon Prime thing. But anyways, they're competing with that, and investors seem to like that. Lastly, we'll point out Purple. You know, the mattress company. They put the mattress in the box. They send you the box. You got a mattress in a box. They're going to sell 11.7 million shares, but it's not from the company. The company won't actually benefit from these 11 million shares at all. It is coming from a shareholder. And I find it coincidental that the two co-founders just retired, and there happens to also be a whole lot of shares coming out. Who could own all those shares? Well, it's probably the co-founders. Anyways, they're selling 11.7 million shares. Stock was down about 5% on the day because of that news. You got earnings tomorrow from Guess, JK Solar, Macy's, Cena, Cloudera, CrowdStrike, and PVH. That's your Ralph Lauren's. Dividends coming out, $1.50 from Home Depot, Lind, which hit new highs today, 96 cents, and QCOM paying out 65 cents. I'll take a chance here and try to answer your questions, see what I can do, and then we'll get out of your way there if that's what we're going to do. Justin got some Zoom shares, 60. Oh, he sold them to 140. All right. Yeah, that's a tough one. Lockheed Martin breaking out in September. You kind of hope so, don't you? Don't you kind of hope so? It's quiet right now, so it's a tough one to say. I mean, it's very hard to guess the direction of a stock that's not moving at the moment. But you know, you have the seasonal sort of bullishness that they normally get this time of year for whatever reason. So there you go. Yeah, we'll see what happens. Seems like most people want to get in on the next Tesla. Can you blame them? You could find one? I love it. NVIDIA killed it today with their video cards. Micron, NVIDIA's been killing it in general. Yeah, so obviously I mentioned it earlier, performing better than Apple. Yeah, a well-deserved year for them. Very, very well. Everything they're doing this year, and AMD as well. Intel's the only one that didn't really get in on the excitement there. That's impressive. Yep. Broadcom and DocuSign comments before earnings. Not really. DocuSign had a great day today. Everybody's looking for that other stock that may be cloud-based, that maybe also is going to have great earnings through the virus, right? Things that people would have been using more. I buy it. I mean, I buy the idea of that. I'm not saying buy the stock. Up 20% on the day there, and hey, hopefully it keeps going. Got good things happening there. Yep, I love it. Taiwan Semiconductors, also a good stock overall, and it has been a good stock. It's the biggest stock inside the SMH, and obviously performing really well there. Almost back to highs, so starting to look a bit better there. Yep, we're starting to wake up, I should say. Yep. Typically, Labor Day is when stuff starts as far as markets are shortly after. Yeah, typically is when volume picks back up, the activity picks back up, election year as well. So, you know, that's awesome as well. Cloudflare looking good as well. Speaking of cloud-based, yeah, I can't argue with that one there. I mean, it's just incredible how many, and you guys see it, you're here every day. I get it, you see there's other stocks out there, but it's incredible how many people I talk to that are like, just want Apple, just want Tesla. And I'm like, give me a good reason, right? Why do you want just two stocks for the rest of your life? I find that one difficult. But you guys get it. There's lots of other stocks out there that are doing really well. I mean, it's starting to wake up into that good broad-based type rally. 1.5 under 25,000. How often is that paid? Well, it's yearly. Yeah, I mean, that's yearly. So if you're on our website and you're like, what's it cost to work with Jazz? Just basically $75 a year. As your account grows, we lower that fee there, but that's based on a year. So unless you're volunteering to pay that more often, don't do that. But yeah, that's all it is. I love it. Do you think the stock market's in a bubble? No, I don't think it's in a bubble. You got a long way from a bubble here. You only have a few stocks doing the heavy lifting. Remember .com era there, financial crisis time? You had everything going crazy there. We don't have that right now. We have just a few stocks that everybody's really excited about in the broad scheme of all the other stocks. There's a lot of underperforming areas right now. Yeah, I love it. You like your Walgreens discount there? I like it. Yeah, you can't argue with that. I mean, there's people that like those severe discounts. You recognize that Walgreens is probably going to be just fine. They're making some major shifts there. So is CVS, by the way. So that's going to take some time, and you're just sort of willing to average in at Lowe's. I don't have a problem with anybody who wants to buy a discount. Which one of the ARK ETFs is better for growth? You want to compare the two for sure. There's a difference there. But yeah, I don't know. Just compare the two. There's only really the two to look at. You think Zoom's a bubble, Tesla? Well, Zoom, yeah, market cap now, what, almost 100 billion? Really? That one's hard to argue, but you can't make the argument when the stock's just blasting off. The growth investors are going to say, so what? What does it matter? So, yeah, that's a tough one there. I love it. You make your purchases on the 1st and the 16th, and it seems the markets are always up on those days. Are you making a mistake? Frank, actually, we did this study for our customers because what I always try to do is figure out what's the best way for the customer to benefit. We don't have anything to sell, right? So once you're working with us, we go, well, how do we just make it better, right? So because of that, we did a study. We looked back over 30 years to 35 years to see if you could invest on any given day of the week and in any order, meaning like you would do Monday, and then next Monday and the Monday after, Tuesday, the next Tuesday, and so on. If you did Tuesday morning, Tuesday afternoon, Monday morning, Monday afternoon, things like that. We went through and tried to find even the slightest advantage. It's a long class in the dojo. If you're one of our customers there, I actually showed every last bit of data, and it was one that I'm still tired actually thinking about what we prepared for that. But you're right, the markets tend to be higher on the 1st, and also, well, the last day of the month, first day of the month, and the middle of the month is actually very common. So I wouldn't say that that's something that always happens, but if you find that it happens more often than not, you're actually right. You're noticing those stats a little bit earlier than other people do. So I love it. How do you interpret the market rallying, but the VIX also holding strong? Yeah, we actually put that in our research site there. Why is the VIX holding up? What's going on there where we're at well beyond those prior highs, but yet the VIX staying above its prior lows? Why isn't it selling off there? A lot of great reasons for that. Election year is one of them there. Fear in general, and the fact that the stock market's moving higher on just a handful of stocks. There's still a lot of volatility and a lot of need for protection in all the other areas of the market. Or you could argue that people are making that decision. I don't know for sure, but that's it. I love it. Oh, sweet. All right, well, I will wrap it up there. Well, I appreciate you guys watching and joining us here today. It seems like we're missing a light. I don't look as pretty as the other guy commented earlier on our video. I sort of feel like I look like a gremlin. That was not very nice, Mr. Person. Anyways, have a great rest of your day. Thank you so much for watching, and we'll see you tomorrow. We'll do this all over again, and if you hit the subscribe button, I greatly appreciate it, and talk to you soon.